Welcome to this Tuesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. No breakthrough after day one of US-China trade talks in Stockholm, but officials are said to be considering another 90-day extension. For those without deals by August the 1st, President Trump suggesting a blanket 15 to 20% tariff. US Trade Secretary Jamieson Greer telling CNBC India needs to get clear about how much they're willing to open their markets.
They have expressed strong interest in opening portions of their market. We, of course, are willing to continue talking to them. But I think that, we need some more negotiations on that end with our Indian friends to see how ambitious they want to be.
Agriculture clearly remains the roadblock. India's industrial output growth slowing. In the meanwhile, to a 10-month low dragged down by the mining sector, which saw its worst performance in nearly 6 years. There's a lot to unpack there then on the trade front and on the macroeconomic front domestically for India. First of all, let's take a look at the Asian markets, which are in the main on the back foot despite record closes that we saw yesterday for the S&P and the Nasdaq. All eyes, as we've been reporting, on US-China trade talks. And the latest here is that President Trump says he may go to China, but expect no summit. And no summit has been planned with President Xi Jinping. Now, with that, the US and China began trade talks in Sweden overnight. Let's get more on these developments. Elaine Yu has the details for us. Good morning, Elaine.
Good morning, Sri. So it sounds like these trade talks are more about de-escalation for the time being, keeping the dialogue open, and we're also looking at a likely extension of the August 12 deadline, so pushing that for another 90-day increment to much later in the year. And we're seeing a more constructive tone coming out of both sides. China's foreign ministry spokesperson, in response to the FT article about the U.S. freezing any new export control to Chinese entities as a gesture ahead of the trade talks, the spokesperson in China's foreign ministry said he hopes the U.S. and China would have more consensus, more cooperation, and less misperception. And he also described the economic and trade cooperation between the two countries as mutually beneficial in nature. And Greer also had a more positive tone, saying that there's interest from the two sides to meet, and Trump has actually just come out to say that he was not seeking a summit with Chinese President Xi Jinping, but he may visit China at Xi's invitation, which Trump said had been extended. And we know that President Xi Jinping did say he would welcome Trump to visit when they had a phone call earlier. So a lot of attention will be on when that happens. But let's take a look at how U.S. Trade Representative Jamieson Greer described the trade talks so far.
This is the third round in the past 3 months. So just the fact that we're talking and we want to move forward in a positive way is its own good sign. I don't expect some kind of enormous breakthrough today. What I expect is continued monitoring and checking in on the implementation of our agreement thus far, making sure that key critical minerals are flowing between the parties and setting the groundwork for enhanced trade and balanced trade going forward.
So no enormous breakthroughs expected, but there are a range of topics on the table, from trade rebalancing to even TikTok, which is not officially part of the trade talks, but Howard Lutnick has said is unofficially part of that. So a lot to watch, and we'll give you more as the trade talk continues throughout today and potentially on Wednesday. Back to you, Sri.
Elaine, great work. Thank you very much indeed for that. Now, as US-China talks continue, President Trump is considering a baseline tariff of 15 to 20%. That would apply to countries that fail to reach a deal with Washington before the August the 1st deadline. It remains unclear if this lower rate would apply to India or if tariffs will revert to the original 26% announced back in April. So far, multiple rounds of talks have failed to break the deadlock. Our colleagues in the United States spoke to Trade Representative Jameson Greer to get the latest on where negotiations with India stand.
You could go back and find clips of me saying we're about to have a deal with India. I mean, I think the thing to understand with India is their trade policy for a very long time has been premised on strongly protecting their domestic market. That's just how they do business over there. And the president is in a mode of wanting deals that substantially open other markets, that they open everything or near everything. So we continue to speak with our Indian counterparts. We've always had very constructive discussions with them. They have expressed strong interest in opening portions of their market. We of course are willing to continue talking to them, but I think that we need some more negotiations on that end with our Indian friends to see how ambitious they want to be.
And it's exactly the perception surrounding these US-India trade talks that is dogging the market at the moment and creating a degree of negative sentiment. And speaking of which, the Indian benchmarks did edge lower yesterday, reflecting some earnings disappointment and after weak results from Kotak Mahindra Bank. With that backdrop, the Indian markets will be joining us in about 40 minutes' time. Let's give you Gift Nifty futures and what they are indicating. 24,664. And if we do kick off at that level, that will represent some, let's call it, little change from where the benchmarks left off yesterday. Dollar rupee exchange rate at 86.753. Now we are focusing on India's IPO frenzy today. 14 new issues are lined up to open for subscription this week. Among them, offers from big names like National Securities Depository or NSDL, Aditya Infotech and M&B Engineering. They're expected to hit the market. SoftBank-backed Lenskart also expected to file for its billion-dollar IPO this week. So far this year, 149 companies have gone public, and investment bankers say Indian companies could raise around $2.4 billion through IPOs this month alone. However, we are coming off a sluggish first half in terms of deal volume, where India saw a 30% year-on-year drop. While that may point to some caution, capital raised in that period was down only marginally, suggesting fewer but higher quality listings. Let's get more on the outlook for the IPO market within India. Abhinav Bhatti joins us now, Head of India Equity Capital Markets at JP Morgan. Abhinav, great to have you on the programme. So as we said there, after a slow start to the year, it looks like activity is picking up. So how would you characterise deal flow and overall IPO pipeline towards the end of the year?
Thank you, Sri, for having me on the show. You're absolutely right. I think we're getting into a phase of the market where the deal activity for second half of this year is going to remain quite robust from whatever we are seeing on the ground out here. A number of companies actually utilized first half of this year to get their filings in place, and we would expect them to approach markets in terms of the pricing and getting listed in second half of this year. Mostly, I would argue, starting September onwards could be a pretty busy period, especially for larger names that have already been filed at the start of this year. Overall, last year, second half was something that was significantly busier. My sense is we should be somewhere in that similar zip code when it comes to IPO activity for second half of 2025 as well.
I saw a figure of $30 billion that Indian IPOs could potentially raise over the next 12 months. Does that sound right to you, Abhinav? And if so, what is that telling us about the issuers and their confidence levels in the capital markets?
I do expect that next 12 months you could see something of that zip code, about $30 billion getting raised through IPOs. Just as a reference, while the number looks large, but if you really compare it from the perspective of how much it represents as percentage of total market capitalization from the previous peaks, it's actually going to be largely in line. I mean, for a 5 trillion plus market capitalization that we have today, it implies roughly about 60 basis points being raised in IPO capital. If you look at previous highs going back to 2021 or 2017 or even 2010, those numbers were at that point in time 60 basis points or maybe slightly north of it. In fact, if you argue it on a free float market capitalization basis, then maybe this number is even lesser than those previous highs. So yes, with the growing market, the number does look large, but really in the context of where the market has grown as an overall size basis, I think it's very much in line with what we should expect from India going forward.
Abhinav, and are we looking at $1 billion plus deal sizes? And what was your take then of HDB Financial Services and their debut earlier this month, which was the biggest so far this year?
So this year we would see, our sense is anywhere between 6 to 8 IPOs just for overall for the course of 2025. 2 have already taken place, Hexaware at the start of the year and then HDB Financial Services more recently, but a few more to go, which should be north of $1 billion in size. My sense is that, look, the quality of companies that are approaching the market in this phase, not just this year, but I would argue all the way from second half of last year when the IPO markets in India really opened in earnest, has been much, much better. To me, that is really the defining factor. Yes, short-term to near-term performance can always be affected by how markets are. IPOs is a part of the subclass of equity. They will ebb and flow. But in the long term, I think what matters is, has the market or that IPOs that have come to the market been able to deliver returns in the longer term? I would expect the same for not just HDB and Hexaware, which have already listed, but a number of companies that are going to come to the market later this year as well. In terms of quality curve, is better.
Right. So from an investment banking point of view, can you give us a sense of how much, and a capital markets point of view, can you give us a sense of how much underwriting and deal advisory business JP Morgan is looking to capture in what seem to be very constructive IPO markets?
Look, we target roughly about, call it somewhere in the zip code of about 10% of market share when it comes to, each of our key lines of businesses globally in most markets, but certainly here in India. That's the target for us here as well. India is, of course, a very competitive market, as you're well aware about it. But yes, from a deal flow perspective, that's what we would expect and target to get to call it somewhere in the vicinity of about a 10% market share. But equally, look, it's not just about the market share, but India is going through a process where the overall pie is increasing. We raised about $70 billion across IPOs and follow-ons, blocks included, last year. This year should come in fairly close to that number. First half or till July, we have done about $35 billion. I wouldn't be surprised with second half historically being busier than the first half in India. You may actually get close to $70 billion again. These numbers all look large in the context of where history has been. Like I said, when you compare it on a percentage of these flows being raised or capital being raised on percentage of market cap, it's very much in line, maybe even slightly lesser. There's more headroom to grow here.
And we had a board up there, a graphic on the up and coming listings. Are there, from a sector level, are you expecting more financial services on the horizon, more tech sector issues, engineering? What sort of flavour at a sector level, Abhinav, should we expect?
Tech, and in particular consumer tech, would be a significant portion of what should come to the market later this year and next year. I think that's a sector which is highly underrepresented when you look at it in comparison to other global markets like US or China. In India, consumer tech, I would argue, is just about less than 2% or 3% of total market capitalization that today exists, whereas that number should ideally easily be in the teens, if not higher. So tech will remain large. Financial services, yes, you've had HDB as one large IPO. You could have a few more that will come to the market. But really, from an overall perspective, for growing economy, financial services will always need capital. That number has come down from nearly a third of capital being raised by the sector historically to more like 12 to 15%, but they will still remain reasonably sized offerings that will come out from this space, like I said, because you will need financial services to keep growing and supporting the economy.
Abhinav, but how strong are the headwinds here? Secondary market has been showing some signs of weakness. Domestic inflows, they have been declining, and perhaps foreign investment may shift towards more attractively valued markets like China. Does that potentially undermine India's IPO momentum?
So we will see, look, at the end of the day, number one, we are in a privileged position from the fact that at least there is organic capital creation that is happening in the economy, which is the domestic capital base. It will ebb and flow. There will be months when, organic domestic capital creation is much larger. We have been in a slightly softer patch earlier this year, but the fact remains that the direction of that capital creation has been the same, which is it's been all positive. There have not been any months of redemption despite we going through significant patches of volatility. To that extent, I would say, look, secondary markets will always be the driver for primary markets. To the extent that we get into periods of extreme volatility or softness in secondary markets, you will see capital raising activities take a breather or a pause for a few weeks, few months, like we saw between, let's call it February to April of this year. But the fact remains that where we are within our economic setup and how capital creation is happening, IPOs are an important part. IPOs as well as capital market activity in general is going to be a very important part in order to take care of these domestic flows coming into the economy. They can either go towards continuing to buy in the secondary market, wherein we will have issue about valuations becoming more expensive, or sterilizing FII outflows, or coming to primary markets. Those are the three places where domestic capital will get consumed. I would argue IPOs as an asset class have given a mid-teens return if you look at IPOs that have happened over the last 1 year. It's not like every IPO has been in the green, but short-term to 1 year returns have been in that zip code. For the market as a whole, which has been flattish, I would argue IPOs have done pretty decent returns from that perspective.
Can I bring in, Abhinav, and you touched on this, the valuation mismatch, and are there concerns, especially when it comes to, it's been described as the K-pop issues of the big South Korean companies that have businesses in India, like LG Electronics, Samsung Electronics, India businesses. Those are upcoming IPOs that are being very closely watched by investors. Is there a concern that they could draw liquidity away from the secondary market and create distortions, mispricing, leading to even bigger valuation mismatches and froth in the market?
Look, I wouldn't say taking away liquidity is a question, because at the end of the day, those companies are listing in India. At the end, these are Indian businesses which are listing on the Indian stock exchanges. So it is very much an end-to-end Indian dynamics. Yes, I mean, we've been pretty open in terms of an economy, in terms of allowing capital, as long as it is meeting all the rules and regulations of the country, to move freely across borders. I mean, these are all offer for sales, like Hyundai did last year, or LG India that has filed right now. But from my perspective, I would argue that as long as we continue following the first principles of valuing these companies properly and pricing them well, these trade in India, you will see momentum and interest levels continue to remain high for these being purely Indian domestic businesses out there. The drivers for these businesses are very much Indian in nature.
Understood. Abhinav, NSE IPO, is that likely to be a market-defining event?
Look, whenever it happens, it would be, because it is the largest exchange in the country, one of the largest globally. Like all of us, we are also waiting whenever things happen on that front. But yes, to your question, it will be a market-defining event without a doubt.
Understood. And what are these robust oversubscription rates in the Indian IPO market telling us about qualified institutional buyers and oversubscribing, and the retail investors oversubscribing at an even higher margin?
Yeah. See, that's been the flavor actually right since last year. You would also notice that invariably the outcomes for IPOs is at the extremes. You will either see subscriptions to be just about crossing the line, or you'll have massively oversubscribed IPOs. That is how the nature of the beast. We will continue to see that. From my perspective, it just continues to show that the level of interest in the IPO subclass as part of the overall equity asset class continues to remain high. And like I said, if you look at last 1 year returns for the Nifty, it's actually been flattish. If you look at returns for IPOs, and I'm talking about weighted average returns here, which is the right way of really looking at it, those have been in the mid-teens. So investors do see these facts that if you were investing in IPOs and choosing them properly, continuing to hold them for a longer period of time, they will not go up in a straight line. As an equity class, they will not go straight line day 1, day 2, day 3. But over a period of time, if they are delivering a mid-teens return or even closer to 17-18%, that's not a bad place to be in, especially when secondary markets are flattish.
Yes, the early backers and the VCs are riding that IPO wave and timing their exits to coincide with these market conditions. Abhinav, we'll leave it there. Thank you very much indeed for joining me on Inside India. Abhinav Bhatti there from JP Morgan. We're back in 2 minutes. Welcome back. You're watching Inside India. Some of the stories that we are keeping tabs on. President Trump has set a new deadline of 10 to 12 days for Russia to act on Ukraine. The fresh warning signals that the US could move ahead with secondary sanctions on buyers of Russian products if Putin fails to make progress on ending the war with Ukraine. India is a key importer of Russian oil and could be affected by those sanctions. The Trump administration continues to be plagued by the case of convicted sex offender Jeffrey Epstein as pressure mounts from supporters and opponents alike to release more information about the investigation. In his latest effort to distance himself from Epstein, Trump claims he turned down an invitation to his infamous island in what he calls one of his very good moments. Onto the Thailand-Cambodia border conflict. A Thai army spokesperson claims that Cambodia has conducted attacks in several places after the ceasefire deadline, and Thailand retaliated in self-defense. Military representatives of the two countries are talking to each other as we speak. The Indian Army says it has killed 3 men in an intense gunfight in Kashmir. Local media reports suggest one of them may have been involved in the terror attack in Pahalgam back in May, but there is no official confirmation yet. In the meantime, heated discussions in Parliament over the military operation against Pakistan that followed this attack. The government insists Operation Sindoor was called off only after meeting its objectives, denying it bowed to any external pressure. This after President Trump's claims of brokering a peace between the two nations.
The goal of this operation was to target the terrorist camps and their supporters and leave them completely ruined, and to convey the clear message of India's zero tolerance towards terrorism. India halted its operation because all of its political and military objectives studied before and during the conflict had been fully achieved. Therefore, to suggest that the operation was called off under pressure is baseless and entirely incorrect.
In the meantime, President Trump saying that the US and Europe would send more food aid to Palestinians in Gaza to help ease the hunger crisis there. There are more trucks going through checkpoints as well as airdrops, but critics say they are not nearly enough to feed the hungry. NBC's Matt Bradley files this report from Tel Aviv.
Well, under overwhelming international pressure, the Israeli government over the past weekend has decided to allow more food aid into the Gaza Strip. They said they're pausing fighting for as much as 10 hours a day in various parts of the Strip, which sounds like a rotating plan. They're letting in more aid, more trucks through border crossings. More than 100 have already come in, according to Israeli authorities, and they're allowing countries to airdrop aid. And Jordan and the United Arab Emirates have already done so. And we've been seeing images of Palestinians carrying sacks of flour from aid drop sites and from truck distribution centers. But aid organizations warn that this is not enough. We heard from some aid organizations saying that this was a grotesque distraction and calling on the Israelis to open all the borders to the Gaza Strip to allow aid to flood in completely to the starving population there. We've heard from the Palestinian health authorities in Gaza, which is ruled by Hamas. They said that as many as 14 people had died from malnutrition. 2 of them were children. This raises the death toll from malnutrition-related conditions to nearly 150. More than half of them are children. Matt Bradley, NBC News, Tel Aviv.
Coming up, India's industrial output hitting multi-month lows, and tariff uncertainty could add to those economic woes. We'll discuss the outlook after this short break. welcome back. Let's take a look at the Asian markets at this juncture. We are seeing the markets in our region on the back foot, so a fair bit of caution despite the record close that we saw on the Nasdaq and the S&P stateside. So all eyes on the evolution of the US-China trade talks in Stockholm and what happens there. So there is some caution in these markets. Let's take it to the Indian markets, and we are about 15 minutes away from the official open, and we are looking at an equally cautious start to the day there. GIFT Nifty futures are suggesting an opening number in the region of 24,664. If we see that, that's slightly weaker. It's really going to be earnings that will continue to inform the direction of travel on the Indian markets. Remember that the benchmarks yesterday did edge lower, reflecting some earnings disappointment, particularly after the weak results from Kotak Mahindra Bank. Right, let's bring it to the data in India. Growth in India's industrial activity fell to a 10-month low in June, expanding by just 1.5%, below Reuters' forecasts of 2% growth expected. The slowdown was led by the mining sector, which posted its worst performance in nearly 5 years. Electricity generation also shrank by 2.6%. Manufacturing, however, did provide some relief, growing around 4% in June, up from 3.2% in May. And the Indian Finance Ministry is sounding the alarm on weaker trade performance going ahead. In a monthly bulletin, the ministry said global slowdown and tariff uncertainty could further hurt India's exports in the coming quarters. For the overall economy, the report said there's cautious optimism. Let's get more on the outlook for India's macroeconomy, bringing Sakshi Gupta, Principal Economist at HDFC Bank. Sakshi, welcome to the programme. First of all, your take on India's economic activity last month. Industrial activity slowing to 1.5%, a 10-month low. What is this telling you about the underlying fundamentals?
Right. Good morning. Thank you for having me on the show. Look, I think the IIP data that came out for June does kind of confirm that, industrial production slowed down. And if you look at the average for the April to June quarter, the average for industrial production is close to 2% compared to 5.5% average that we saw same time last year. So at the headline number, of course, this is indicating that there's been some amount of moderation, as you highlighted. I think a lot of this is coming from the moderation in the electricity production as well as mining production in the first quarter of this financial year. A part of this has to do with the early onset of monsoon and the excess rainfalls that we saw, over the last month. So, rainfall tends to have an impact on both these sectors. But I think on a more optimistic note, I think the IIP data also confirms some other underlying trends that are happening. For instance, one, I think manufacturing growth has kind of held up and has performed better on average compared to expectations over the last 3 months. Moreover, if you look at sectors like steel and cement, there the production growth has been much higher than what we saw, over the last couple of quarters. I think a lot of this is benefiting from the front loading of government expenditure that we have seen so far this year. So I think overall a mixed bag on the IIP numbers. And
Sakshi, why did the mining sector see its worst performance in 58 months?
Well, there are a couple of reasons here. One is that we are looking at YOY growth numbers, right? So there is, of course, this base effect that is playing out, that is pulling out the annual growth numbers for the month of June. In addition to that, in India, we saw the early onset of monsoons, end of May. And then during June, you did see parts of the country receive excess rainfall. And that usually tends to weigh on overall mining production. I mean, that is a seasonal trend that kind of plays out.
We have to question, though, India's macroeconomic outlook and whether it is really as sound as 6.5% suggests headline growth. When you consider relatively subdued Q1 corporate earnings, June quarter passenger vehicle and two-wheeler sales, which are a bellwether of the economy, they fell and broke a 4-year growth streak. all does not seem well in India's economy, Sakshi. Would you agree? And is 6.2, 6.5% headline growth necessarily at risk?
Right. I mean, look, I think the way you have to kind of parse through India data, and, we've been tracking a lot of high frequency indicators, including what you just mentioned. I think the India growth story at the moment is very, very mixed, right? So, on the one hand, as I said, you have support coming in from, government expenditure. You have the infrastructure segment or the capital goods segment that seems to be doing a little bit better. But at the same time, if you look at consumption growth, there the evidence seems to be very, very mixed. So especially indicators like passenger vehicle sales that are an indicator of urban demand, things seem to have continued to slow down or remain very weak over the last couple of quarters. This is a trend that we have been seeing since last year. And on top of that, if you add, what's been happening to the formal job market, where hiring intentions, in part because of what's happening on the global side in terms of uncertainty on trade, etc. We are still awaiting to see a meaningful pickup there. So again, the consumption story is much more moderate compared to the infrastructure piece that we are seeing that still continues to show momentum. So it's very, very mixed at this stage at the aggregate level.
Yes. So can I pick up on that, on one of those points that you raised, Sakshi, and that is job creation. Earlier this week, we heard from TCS cutting 12,000 jobs. Is that industry AI-related displacement, or do you think that there was a fundamental reason as to why that was happening?
I think in the tech space in general over the last couple of years, right, we have seen globally as well as in India that there's been some moderation, in part because initially everybody was very optimistic. I think you expanded capacity, but then there's this normalization from that peak that is happening. But coupled with that, I definitely agree with what you're saying, that this, gradual move towards AI, of course, is a risk that we kind of need to now think about, especially for an economy like India, where, job creation is very, very important in the service sector. Third, I think there's of course this sense that, the service sector in India is very closely linked to how the global economy performs, right? And we've been, tracking data on the global side, and there is this general sense that with all these tariffs and uncertainty, of course, there is some amount of slowdown that is happening.
And let's pick up on that. The finance ministry seems to be cautious, if not managing expectations about trade developments and trade growth, given exactly what you referenced there, the global slowdown and tariff uncertainty. How much is riding, Sakshi, on a US-India trade deal?
Well, look, at this stage, I think a US-India trade deal is, of course, very, very important. US is a very important trading partner for India. We have exposures in a number of sectors that are labor intensive in nature. For instance, textiles, auto. So I think that getting, a deal signed with the US, of course, from a macroeconomic outlook perspective, not just in the near term, but over the medium term, is very essential. Over the last couple of weeks, we have seen some, stalling, in terms of the trade talks. There are, of course, some issues around, for instance, agriculture, dairy, that are, I think, currently being discussed, and there hasn't been, final agreement there. But from a macro perspective, I think US is a very important trading partner and a market, not just on the goods, but also on the services, export piece for India.
Do you fear, though, it's going to be next to impossible for India to agree to a substantial reduction on tariffs for US agriculture and dairy products, which are red lines as far as India is concerned? You and I know that, and have been historically in trade negotiations. And if so, is there a non-trivial risk, Sakshi, that a full and final deal won't be ready by the end of the year?
is, difficult to kind of make conjectures around what, will be the final shape and form of the deal. I do believe that, there is intent in kind of getting through and coming out with a deal with the US. So, over the coming weeks or months, I think before the end of 2025, of course, we should have a deal with the US. These are, difficult issues domestically, both the sectors that you kind of mentioned. But I do believe that there will be, like we've seen, with the EU or with the, Japan, trade deal that has come out, I think there will be some amount of give and take. And we are hopeful that ultimately we will kind of, get a trade deal with the US, given, as I said, that US is a very important trading partner for India.
So actually, where does all of this leave the RBI and its next move? I gather that their next decision is going to be on August the 6th. Given that they have done so much in the way of liquidity injections and front-loading of rate cuts, how much pressure is there on them to do more?
Well, look, I think that the upcoming August policy, I don't think that the RBI is going to cut the policy rate further. As you said, they've already front-loaded, 100 basis points of rate cuts this year. I think that the RBI would want to wait, for that to kind of play out and see through the system and economic activity. They've provided enough liquidity support. Recently, the lower inflation prints in India, have kind of opened up room for further monetary easing. However, I think at this stage, the RBI is likely to remain pat because, they have to be kind of forward-looking, right? And next year, from January onwards, we do see that inflation in India is going to start inching up. So at this stage, I think they'll be on a wait-and-watch mode. I think growth, as I highlighted before, we are not seeing a considerable slowdown at this stage, right? The story is very, very mixed. And a lot of the front-loading of, government expenditure, plus the tax cuts that were initially announced in the budget and the interest rate cuts, I think the RBI would want to wait and see how that plays out before looking at, further rate cuts down this year if required.
Sakshi, what's your take on the structural challenges, especially as they pertain in India to structural challenges surrounding job creation? And do you feel that trade deals and more FDI is going to help resolve these issues? And will greater trade openness lead to perhaps higher long-term employment ratios, especially in an environment where many economists believe that the official data is understating unemployment?
I think that, the job creation, pace is a culmination of a number of factors. I think that, yes, increasing India's, trade with the rest of the world, specifically in sectors that are labor intensive, is going to help kind of spur manufacturing activity and, create jobs. But I think that the job creation process is also a combination of how domestic economy performs or how domestic consumption and domestic industries perform. Coupled with the skilling issue, right? So we have heard a lot of companies in India talk about, skilling gaps, especially in the services sector. So I think that the job creation problem is not as simple as, kind of opening up the country for a lot more trade and it resolves and, creates a lot more many jobs. I think it is much more complex policy, which has to be a combination of spurring domestic consumption, capacity utilization, manufacturing, plus also focusing on skilling. More importantly, now that, we know, the kind of changes that AI is bringing about.
Yes, especially in the education system. It needs an intellectual revolution is how one guest described it. Sakshi, when you consider, to their credit, Prime Minister Modi, Commerce Minister Piyush Goyal, they've been very active, and there's been a lot of momentum with trade deals UK, India, EU, India is waiting in the wings. Hopefully, US, India. There's this momentum in the GCC economic corridor with India. At what point is all of this going to translate into clear and firm FDI intentions and inflows? Or is it, at the end of the day, just going to be a trickle-down effect over the course of years?
Right. No, I would like to believe, look, what has happened to FDI, net FDI over the last 2 years, right? Not just in India, but this is a global phenomena where FDI flows have kind of slowed down for, a number of reasons. If you look at the India growth story, over the next 5 years, most economists would estimate that India is going to, grow between 6.5% to 7% on average. As you mentioned, there are these positive stories in India, the GCCPs, the services sector, the electronics story within manufacturing. So there are all these segments within the economy that are showing promise and are, showing some momentum. I think once we have some clarity on the tariff front, not just for India, but globally, and there is a shift in how trade patterns and capital flows kind of move, I think that I would be reasonably confident that by FY27 we should start seeing some positive momentum that kind of builds on over the next 4 or 5 years. There's already been a lot of reforms in terms of domestic policies, right?
Indeed.
Be it ease of doing business, regulatory reforms, etc., which further add impetus to, attracting FDI over the medium term.
Sakshi, let's just end our conversation on the reform programme as it stands in the monsoon session of Parliament. What are, in your opinion, the most pressing economic reforms this administration needs to implement and enact?
Right. There are a couple of things that are, already being discussed and likely to be passed. Of course, one of them is the new income tax bill. It aims at kind of demystifying the whole, income tax language and bringing more transparency and clarity. I think that from a, government, collection perspective, from the consumption perspective, I think this is, from a regulatory side, this is important. Also, they are looking at, discussing the bill around, an amendment around improving the ease of doing business further. And I think that this has been a process and a focus area for the current government. So I think, either decriminalization of certain offenses under manufacturing or further improving the ease of doing business. These are some of the issues that are being discussed. And I think that this would really help further kind of augment, potential growth or long-term growth for India over the medium term.
Sakshi, I'm very grateful for your time. Thank you very much indeed for your analysis. Sakshi Gupta there, HDFC Bank. Thank you. Now, the Indian markets have joined the trading day. We will take a look at some of the big earnings stories when we return in 2 minutes. Short break. Welcome back. The Indian markets are online. Let's give you a look at the Nifty 50. It is flat at the open at 24,653. Let's give you the exchange rate while we're at it, 86,794 dollar rupee exchange rate. So the rupee is slightly softer against the US dollar, in other words. Earnings season is still in full swing. Quick look at shares of Adani Total Gas. The stock is up just marginally by 0.2%. Costlier gas purchases hurting Q1 profits. This as the Indian government cut the allocation of cheaper natural gas to distributors like Adani Total. Low output was cited as one of the reasons behind the cut. Adani Total's net profits fell 3.8% to $19 million. And higher gas prices are also hitting GAIL India. The Gas Authority of India reporting a sharp drop in profits. Net earnings fell over 30% last quarter, even as demand held steady. The company's raw material costs, though, spiked over 20%, squeezing margins. The gas operator is also in initial talks with Alaska LNG for a long-term deal that could ease some of these cost pressures. The stock up by 1.5%. And a very turbulent session for Singapore Airlines after its latest quarterly numbers. JP Ong joins us with the details. Good morning, sir.
Good morning, Sri. And again, I'm sure you took note of Singapore Airlines opening the session here in Singapore down by more than 7%. Again, that very discouraging report card or business update for their fiscal first quarter that ended in June. Now, there are a couple of reasons why this is the case. We did see signs, at least, of revenue starting to stagnate on the back of higher competition, actually, from other places, and also rising costs, actually, also eating in the margins of Singapore's flagship carrier. That resulted in operating profits falling by about 14% on a year-on-year basis. But again, it's that delta between operating profits and the bottom line, net profits plunging by almost 60%. And there were a couple of reasons as to why the net profit actually fell by even more than the operating profit. On one hand, we did see the fact that they reported lower interest income, actually, and also lower contributions from certain other companies that they're invested in. But it's really the fact that they took a hit on shares of profits from certain associates that saw a decline of about 122 million Singapore dollars on a year-on-year basis. And of course, this is also related to the fact that this could also be down to a dismal quarter, actually, from one of their major associates, Air India, that also weighed on the bottom line and showing just how punishing that quarter was. Singapore Airlines also commenting that while they're expecting passenger loads actually to improve in the second quarter because of the summer months, they are expecting that cargo, at least the outlook for their cargo business, will be rather uncertain because of the ongoing tariffs and the impact on demand for cargo and shipments on Singapore Airlines, thus resulting in how their stock has actually responded, Sri.
And JP, tell us more about the Air India business, because this is such a tragedy after 171, and there are huge perception and reputational issues here at stake that could affect passenger numbers moving forward and confidence.
And that's the key thing you identified there, Sri. Reputational confidence in Air India after that early June crash that resulted in the tragic death of about 241 individuals, passenger and crew as well. But again, there is the reputational hit on Air India. We talked about the fact that they saw a decline in share of profits from associates of about 122 million Singapore dollars, thus indicating that what the impact was on Air India's business for that quarter. Now, we also have to remember, Sri, that when the merger of Vistara and Air India was completed, that resulted in Singapore Airlines taking a 25% stake in India's carrier, actually, there were high hopes that this merger would transform and modernize Air India and also give Singapore Airlines access to one of the fastest growing aviation and airline industries in the entire world, or airline markets in the world, especially given the fact that India is now the third largest market possibly in the world and growing at a fast clip. But of course, with Air India and all the questions now and whether or not the reputational hit has resulted in a more dismal earnings outlook, there is a question now as to whether or not this huge bet for Singapore Airlines might actually be turning a little bit sour, and whether or not the amount of effort to try and at least rebuild Air India is indeed going to be bigger than it actually seems, than first expected, especially given the fact that the issues, at least with regards to that tragic crash, still haven't been resolved. We don't know exactly why it happened. We still are figuring out how this actually occurred, and whether or not this will actually cast a dark shadow not just on India's aviation industry, but also that of Singapore Airlines' outlook, because they've put a lot of investments in making this merger work, and had high hopes with regards to its contribution to their bottom line, Sri.
Restoring, rebuilding passenger safety perceptions in passenger safety is going to be absolutely critical moving forward. JP, thank you for that. That's all the time that we have today on Inside India. Do keep watching CNBC. Access Middle East is up next. Have a good day.